Good morning, all. Camelback Trading 2724 coming to you this Monday morning, April 20th. We're looking at the market profile of the SPY ETF here on Window Trader. And the bears are trying to do what they did last week with an island top. After we had a gap higher on Friday, and then the following day we gapped lower. That did not hold. I forget exactly which day it was. We'll look when we go to the charts. Before we get to today, just a couple of real quick things to clean up some messages about the website. I had somebody ask me on YouTube to try to really explain and break down the profile for people who don't understand it, and I get it. The problem is I try to keep these videos at a reasonable length, and if I did that, they would go way too long. So what I would suggest, if you have an interest in the market profile, and I think you should because I think it's one of the best tools out there to help you with your trading, you can go to my website at camelbacktrading.org. You could sign up for a one-on-one consultation. It's $75, and for an hour, we go on Zoom. I share my screen with you and totally break it down. Again, that price is incredibly cheap compared to other people that do one-on-ones. The other thing is, if you're really serious about the profile, you need to get the market profile. It's one thing to see my video. It's one thing to hear me talk about it if you're on my voice channel, but to have it as it's unfolding is priceless, and there's many places to get it. I prefer Window Trader, what you see here. You can also get it on CQG, Sierra Chart, Thinkorswim, and I'm sure there's others out there. Remember, there are a lot that are cheaper than others, but you do get what you pay for. So if you really have an interest, go to camelbacktrading.org and sign up for a consultation. Okay, let's get to what's going on today. Well, first off, we traded above that magical 287 level. That's been over 2 years on my radar. M period is a perfect example of how erratic, and I don't want to say useless or meaningless, but it's not something you could really lean on, right? We had the gap last Monday, then we gapped lower. I think so. It was, I believe, Tuesday with the island top. But you have to take it with a grain of salt what M period does. I said I thought 287 would be a very tough level for the bulls to just get over. Well, right now, this morning, they're proving that as we're down at around the 282 level. Put my money where my mouth was. Late Friday afternoon, I bought 10 contracts, 10 287 puts that expire this Friday in my trading account, and I bought 30 in my IRA. So it's going to be a very, very nice start to the week once this market opens, unless things change dramatically. Again, that's a level that has been fought over forever. I could see the bears pushing down hard the first time. I could not see the bulls just getting over it the first time and not looking back. So let's go over destinations and a game plan for this morning. So right now, with just over an hour to go, if we gap lower, it's a big if because we're not that far below Friday's low, and plus we're open into a gap again. We'll use Friday's low of 282.40. I'm going to use it on both sides of the equation as our first upside destination. Then above that, right now my pre-market high, well, actually we're going to have to use the 9 wide because that was a downside destination and now becomes an upside one if we open below it. So 283.84 would be your next upside destination. Then 285.84, which is my pre-market high, and then 287.30, which is a weekly high. Remember, we are still one time framing up for 4 weeks. For the downside, well, as of right now, the price probe, which was at 285.68, is firmly being rejected. Okay, it's still an hour, but right now firmly being rejected. Then, if we do not gap lower, it would be Friday's low of 282.40, then filling the gap at 280.03. It's a 237-point gap, so it's fairly large from the 17th. If that gap gets filled, we have 278.61, which was 9 wide down here, and then a daily low of 275.76. So those are the destinations. So what's the game plan? Well, quite simply, again, I said, everybody's going to say, well, gap rules apply. Well, again, I'm going to say everything has to be put into context. If there wasn't a gap below us and we were gapping lower, I would absolutely say gap rules apply, and I would short it And if we fill the gap, I'd get out and reassess. However, the fact that we're opening on a gap, possibly into a gap, really puts that kind of trade in doubt. Obviously, there were buyers here on Friday morning since we gapped higher. So I don't think I am going to take a trade here on either side if we're gapping into a gap. I'd rather wait for more market-generated information, see if this gap closed or see if this gap closed, maybe in B period. So say in A period, we trade within this gap. B period, we start one-time framing down. Well, now I'll get on board because at least I know my out. If we take out A's high, I'm out, even before the gap. But if you start one-time framing down, the odds of filling this gap are good, or vice versa. We start one-time framing up in B. Well, I'll get long. I know my out. A's low. Now, we are certainly going to have lower value to start, so that's something that you have to keep in mind. But to just take a trade right in the middle of a gap on gap, to me, your odds are at best 50-50. Again, if you're in my trading room at 9:30, once we open, I'll be going through that whole scenario as we get closer to filling one of these gaps, which you know obviously at least one of them will fill. Now let's go to the charts. So the monthly, one-time framing down, that 278 level, the key one to me, I said, again, we're above it, but we won't know to the end of April if we stay above that trend line from all the way back in 2009. Weekly, we are one-time framing up, 4 weeks coming into this week. Here's that 287 line right here. So it is a critical area for me. First time up, we're being rejected, just like back in March. As they battled back to get over it, failed, and then look what happened. We went to our lows. So it's going to be an area that, for the bull's sake, they want to at least battle over it. If they give it up from Friday and don't see it again, well, then I think you're going to get the one-time framing up in the weekly to stop at some point this week. And then in the daily, I had called it up. We gapped higher, stayed above the 5-day balance. We even closed above the 50-day moving average. Well, right now it looks like the odds are we're going to be below the 50, inside this gap, inside this 5-day balance. So quite simply, the bulls want to close the gap from today and get back above the 50 and stay above the 5-day balance. However, if you come down and close this gap and stay below the 50, then the odds are at some point you're going to at least test the bottom of this 5-day balance, which is the 271.41 level. Have a great day trading, and we'll recap at 4 p.m.